Hey everyone, and welcome to The Explainer. Today we're diving into something we all use, but rarely think about. We're tracing how human collaboration scales, starting all the way from small, interpersonal teams, right up to the massive, invisible digital financial networks that we literally rely on every single day. Let's explore exactly how we learned to work together to exchange value.
Okay, so here's our roadmap for today. We'll start with part 1, the power of teamwork, move to part 2, from barter to banking, then cover understanding bank accounts in part 3. After that, we'll leap into welcome to digital banking for part 4, and finally wrap the whole thing up with part 5, modern modes of payment. Let's get right into it.
Section 1, the power of teamwork. Before we can even begin to understand complex financial systems, we have to establish the basic foundation of how we organize ourselves. Now, the distinction between a group and a team might seem kind of basic, but it's absolutely crucial. A group is really just a collection of individuals who happen to share common characteristics. But a team? Well, think of a football squad. A team is a unified force driven by a common objective, actively strategizing together to get the win. You aren't just a random collection of people wearing the same colored jersey. You're fully unified by a specific shared outcome. And when you start piecing individual skills together, literally like a giant puzzle, productivity just multiplies. Because we humans are inherently social beings. Collaborating unlocks our creativity and helps distribute the heavy lifting. This ultimately reduces friction because everyone is bringing their distinct competencies to the table to achieve something that would be pretty much impossible for a single person to do alone. But of course, good teamwork doesn't just happen by magic, right? To function effectively, you need strong soft skills. It always begins with communication. And remember, that's just as much about attentive listening as it is about speaking. Then, interpersonal skills are totally necessary to maintain harmony within the team. You also need really solid feedback skills, both to suggest improvements and to receive them graciously. And finally, conflict resolution is essential. It's completely normal for differences to pop up, but a highly functioning team sorts those out peacefully so the common objective doesn't get derailed. All right, moving to section 2, from barter to banking. Now, let's zoom out a bit and see what happens when entire societies need to collaborate and exchange value. Historically, the evolution of money is just a fascinating timeline. Early on, we relied entirely on barter. But think about it. Barter only works if you have exactly what the other person wants. And that's true whether you're trading Aztec beans or Norwegian butter. That huge limitation actually forced human civilization to innovate standard currencies, starting with things like ancient Indian gold coins, which ultimately evolved into the modern physical currency we know today. Today, this whole process has culminated in the highly sophisticated era of central banking, which is governed by big institutions like the RBI. So what exactly is a bank in this grand scheme? Basically, think of a bank as the ultimate authorized team manager for a society's collective resources. It's a government-authorized financial institution that acts as a safe custodian for the money you deposit. But it doesn't just sit there in a vault. The bank uses those collected funds to extend loans to other individuals and businesses, charging interest, and essentially keeping the broader economic wheels turning for everyone. When you and I interact with these banks, we're usually doing one of two things with our leftover cash. Saving is simply holding on to the money that remains from your income after all your living expenses are paid. Investment, on the other hand, is actively acquiring an asset with the specific goal of generating more income or letting its value appreciate over time. Which brings us to section 3, understanding bank accounts. Have you ever wondered what your bank is actually doing with your savings and how they offer you different ways to manage it? Well, you basically have a few distinct options here. There's your standard savings account. That's your everyday repository for liquid cash. But if you don't need the money immediately, you can use a fixed deposit. That lets you park a lump sum for a long period, and in return, you earn a substantially higher interest rate. Alternatively, if you want to build a really good savings habit, a recurring deposit lets you commit to a set amount, say 1,000 rupees every single month for 24 months. At the end, you get your principal back plus all that higher interest you've earned along the way. All right, section 4, welcome to digital banking. This is where we take a massive technological leap, managing our finances without ever stepping foot inside a physical branch. Digital banking is amazing. It lets you check balances and transfer funds instantly, right from a smartphone or laptop. But with great convenience comes immense personal responsibility. The essential safety protocols are incredibly straightforward, but they are non-negotiable. 1, keep your user ID and password strictly confidential. And 2, never, ever reveal your credentials to anyone. The overarching security of this massive collaborative network absolutely starts with you.
Now, to access our digital funds out in the real world, we use physical instruments. We're all pretty familiar with debit and credit cards, but prepaid cards are actually a fascinating stored value tool. You load a very specific amount onto them, and once that value is used up, you literally cannot spend more until it's actively recharged. That makes it a fantastic tool for budgeting.
And where do we typically swipe these cards? At point of sale, or POS machines. But the tech is evolving fast. We're rapidly moving away from those bulky, traditional countertop machines to something revolutionary called soft POS. By using tap-on-phone technology and near-field communication, this turns a merchant's everyday Android device into a payment terminal. It entirely eliminates the need for them to buy expensive, extra hardware. Technology has completely transformed how we get physical cash, too. ATMs give us 24/7 interoperable access, which severely reduces our need to ever visit a branch. But what's even more impressive is the micro ATM. These are highly portable handheld devices carried by authorized banking correspondents, known as bank mitras. They can literally bring the bank directly to a remote village, securely authenticating customers using just their Aadhaar or fingerprint. And that leads us to our final part, Section 5, Modern Modes of Payment. Let's see how all this builds into the instant digital frameworks we rely on today. Behind almost all of India's recent digital payment innovations is one central organizing team, the National Payments Corporation of India, or the NPCI. They are the primary driving force orchestrating the incredible infrastructure that allows our modern economy to move at the speed of light. Let's compare two of the most vital ways we move money today. First, we have NEFT, operated by the RBI, which allows companies and individuals to perform nationwide electronic fund transfers. And then we have UPI, developed by the NPCI. UPI is just revolutionary because it takes the power of multiple, totally different bank accounts and consolidates them into one single mobile app. It allows for seamless fund routing and instant peer-to-peer payment requests, no matter what time of day it is. Now, there is also massive teamwork happening in the background that you don't even see. This is Notch, the National Automated Clearinghouse. Whenever institutions need to process massive, high-volume, repetitive debit and credit transactions, think things like salary distributions or your automatic monthly utility bills, Notch is the hidden digital workforce, making sure it happens seamlessly across entirely different banks. But wait, amidst all these smartphones and fancy apps, what about people without internet access? Well, this is where true financial inclusion comes in. USSD technology allows anyone to use mobile banking simply by dialing *99# on a basic phone. It requires absolutely zero data connection. It ensures that the less privileged sections of society are fully integrated into mainstream banking. Essentially, technology is making sure absolutely no one is left off the team. It's been quite a journey, hasn't it? We started this explainer talking about small groups of humans organizing to trade Aztec beans and butter. And today, we're using biometric micro ATMs and instant peer-to-peer smartphone tops. We've scaled our teamwork from a tiny village level up to a massive, invisible digital infrastructure. Which leaves us with one incredibly exciting question to ponder. From trading beans to instant digital taps, how will teamwork and technology redefine the future of our money next? Thank you so much for exploring this with me today. Keep asking questions, keep learning, and I'll catch you in the next one.